Hey folks, welcome to Verified Investing here at InTheMoneyStocks.com. My name is Gareth Soloway, Chief Market Strategist here. Today's date is Thursday, December 10th, 2020. So I want to talk about some key stocks with some key trade setups. To do that, I want to start with the chart of AMAT. AMAT obviously has had a mammoth run just in the last 6 weeks to 1 month period. You can see this massive move up on the daily chart. Yesterday it had a pullback, today a little bit of a bounce back after opening lower. The question is this a short? Is this a top forming? Based on the technicals, I would say yes, and the reason I say that is because of this major trend line plus other technical indicators. So if we take a line, or we put a trend line starting at the March lows of 2020, which was the COVID lows, and basically connect it right through these lows, I mean basically to the exact lows here. Look at this, folks. Pivot low, to kissed it here, pivot low, pivot low, pivot low, pivot low, and then kind of right through the highs here, and look at what you get. So you have an RSI that's ridiculously overdone. That's a major factor right there. You have to note the RSI trading currently at 75 and change. You then throw in the mix of this trend line and on the daily, weekly, monthly charts being ridiculously overdone. All of these signals to me tell me that this stock is likely headed lower. Now, if we get a big correction in the market, where could this go? Pretty simple here, folks. This pivot high, this gap fill right there, that would be your maximum correction if it got there. So that's what you'd look for if you look for a big correction. A smaller corrective move just over the course of a week or two, maybe into year end, I could see kind of being down in this range around $82.40. So about a $5, $6 drop from the current level. So we'll watch that very, very closely and see how it plays out. A couple other stocks I want to touch base on. Before I do that, just a reminder, folks, if you want to follow me on Twitter, my handle is at Gareth Soloway. At Gareth Soloway. Very easy to find me on Twitter to follow me. I post up trading ideas, trading levels, as well as key commentary on the market that you're not going to find on CNBC. It's kind of like the earth-shattering stuff. For instance, just the other day, I talked about how shady Goldman Sachs was. 5 days before Tesla did the $5 billion offering, the basically dilutive move, Goldman Sachs did an upgrade with a $780 price target 5 days before that happened. Guess who the lead underwriter was that made the most money from the underwriting and the issuing of shares? Goldman Sachs. So things like that, investors need to be aware of. Bottom line is Goldman was pumping the stock up to do the offering. There's no doubt about it. And again, that's why I don't believe analysts, whether they are upgrade analysts or downgrading stocks. I just don't buy it. There's always an ulterior shady motive, and investors need to be aware of that. All right, anyways, going into a couple other things. If you want to find me, come to InTheMoneyStocks.com. My two services, Verified Investing Alerts and Verified Option Alerts. And again, Verified Investing Alerts is my flagship service. It's my main service. It has live trades that I post, my swing trades. So when I hold stocks overnight, that's where I'm posting them, buying and selling. All levels are posted live. And also daily videos. So you get a daily video, usually about 20 minutes in length, analyzing the market, analyzing trade setups, as well as weekly live broadcasts where you get to ask me questions. All right, let's go on to a couple other stocks. We have some earnings after the bell today. Costco, we got to look at Costco here, folks. I was doing some numbers on this, and you have a beautiful head and shoulder pattern intraday. It is worth watching because I don't think it'll trigger before the close, but nonetheless, if you have any sort of downward move on earnings, you're going to go all the way down to 357 down here. Very clearly, here's your shoulder. So shoulder right here. Here's your head right here. And here's your shoulder. This is your neckline. This is your break point. That's what you're watching for. If it breaks that level, which is the 371.50 level approximately, then this stock goes all the way down to this 357 level right here. So that's your trading idea right there. Again, it doesn't look like it's going to break that going into the earnings, so therefore it makes it a little trickier. But again, you can watch to see if it breaks that in the after hours and tomorrow. Does it head down to that 357 target, which is the head and shoulders target? All right, so we'll watch that very, very closely and see how that plays out. Markets continue to do pretty well today, one day after a pretty nasty day yesterday, although it wasn't really that bad considering that we'd been up so much recently, but nice little check back. I think the biggest chart that you want to follow is on the QQQ. So if I bring up the Q's daily chart, I'll show you why this is an important chart here. Because you had this breakout short term on the daily QQQ NASDAQ 100 chart, and then yesterday you closed back below the breakout level, which potentially opens the door for a failed breakout. We don't know yet though because it hasn't confirmed. But basically, we got a gap down today and then a bounce. And notice the high of the bounce went right back to that line and it's struggling underneath it. So what this means is that it's going to kick the can into tomorrow's price action, and we're going to watch to see what happens with that. Okay, so really kind of interesting there. We'll keep a very, very close eye on it and, basically take it one step at a time. Other than that, again, earnings today, Costco, you have Oracle, ORCL. Let me take a look at ORCL here. That stock really doesn't give us much information. You can see it's kind of equidistant between this high here and this low down here. So again, anytime you're kind of equidistant or in the middle of a range, you could either trade up to that high resistance or down to that level. So nothing there. The one that I'll be watching very closely because it'll be key for the semiconductors is Broadcom. Broadcom's pulling back the last couple days, which gives it room to possibly pop on earnings. But again, I have no indicators here. I still think it's overbought, but I don't know if it'll fall on earnings. If it does fall, this is going to be your key support around 390. 390 would be support on Broadcom if it continues, if it falls in the after hours or tomorrow on earnings. All right. Again, generally markets are positive. We had some crazy action at the open with Tesla trading down all the way down into the 560 level. Now it's back to 622. So that's pretty remarkable. We had Airbnb debut today. What's so interesting about DoorDash and Airbnb is that both stocks from where they opened for the public to trade them, they basically haven't moved. So I won't get, A, B, and B. Let me put up that. So basically, you opened at 46, and look at where you're trading at 49. So, there's literally a $3 move there in the entire move from where the stock opened for the public. And what that tells you is that the public, the smaller investor who's trading these things, they're really not making any money. And if you look at DoorDash, it's much the same. That's not DoorDash. Dash is the symbol on that one. Here we go. So same thing on this is yesterday it opened at 82, closed at just under 90, so that's a small move. And today it's literally trading pennies from where it opened yesterday for the public. So again, the public is struggling here. They're not really making anything, frankly, on this. So just worth kind of keeping an eye on. All right, guys. Should be an interesting after hours with the earnings. We will be watching. I will be trading it with members here. Have a great one. Come find me at inthemoneystocks.com. Look for my name. There's a drop down under my name. Come find me and let's make money together. Have a good one. Take care.